So a quick one today. I'll be teaching us how to calculate your pips value and also how to know your weeks to reward ratio. Get that? Because you can't understand weeks management until you know these two things. Are you getting it? You can't understand weeks management until you know how to put these things in place. Let's say you have a $10,000 account, or let's say an $100,000 account, and you want to risk 1% of that $100,000 account on a trade. So 1% of $100,000 account will be $1,000, right? Yeah, $1,000. You see, haven't determined or defined your weeks, you still need to be able to put that out in action in terms of, okay, since I want to risk $1,000, what would be my lot size? How will I know my lot size? How do I calculate my lot size in relation to my pips value? So let me start off with this. Let's say you want to risk. Total risk is $100, so $1,000. First and foremost, you need to know. Okay, sorry, permit me to increase this a little bit. First and foremost, you need to know the pip value of your assets. Yeah, most times people don't know that each pair has its own pip value. Yes, each pair has its own pip value. So I'll be using two examples here. For Euro USD, that is anything that is excess USD, that is anything that has USD as its base. Is it base or quotient now? As its base. Their pip value per standard lot size. Standard lot size is one lot size, that is 1.00, right? Mini lot size, mini lot is 0.1, while micro lot size is 0.01. that is the least lot size I can go. Now for a standard lot on Euro USD, okay, for a standard lot on Euro USD, okay, sorry, I want to paint this separate, so I will just do another one for another pair. On Euro USD, GP USD, NZD USD, AUD USD, for a standard lot size of 10 pips, that is 100 points, right? That is 100 points. Okay, in case if you don't understand pip value, let me quickly give you that hint now. You see, the difference between 3, that is this last, how do I do this? How do I make us understand this? Okay, let's just make it here. Now when you have 1 point, let's say you have 1.13708 or 009. You see, from this point, this is your point. From this 9, it is your point. Let's say you have 1.13708. This is 1 point. So your pip value starts calculating from your second decimal point. This is your first decimal point. From your second, this is your first decimal point. 3 is your second decimal point. 7 is your third decimal point. 0 is your fourth decimal point. 8 is your fifth decimal point. So your pip value is difference between that last figure, which is your fifth decimal point, and the one below, that last figure, while pips begins from this 0. So that is, let's say the distance between 9 and 5. 9 minus 5 is what? 4. So distance here is what? Is 4 points. Are you getting that? Is what? 4 points. Now if it is 1.137, let me use another figure, 1.13560, and you have 1.13550. Now what do you have here? The distance between here, that's 60 and 50, is 10 points, right? But 1 pips. Do you get that? Do you understand this now? 10 points, but what? 1 pips. I hope you can see this clearly. Okay, let me help you out with this. Let me make it bold. Yeah. Can we see this? So this is how to calculate your pips. So you start calculating your pips from this 4th decimal point. Let me give you an example, a practical example. Now there's a tool we use in calculating our pips on TradingView. That's if you're using Windows. Let's calculate from year to year. Let's say from year to year. Let's see. Okay, let's just leave it here. So what do? You come here, or whatever point where you want to make your measurements. You click on Control, left click, take off your hand on left click. Sorry. Oh, sorry, my bad. It is Shift, not Control. Shift, then your left click. Shift, then your left click. Then you remove your hand from your left click immediately. Then you can use your cursor to do the main movements. So can we see here that we had, now this measurement is peaking. You can see the value reading at this blue zone, right? That is 1.14005. Okay, let us make it even here. Minus 1.13805. Now your distance, can you see now that you have 19.8? That is, this is 19.8 pips. 19.8 pips. Now, if it is in points, it is 198 points. Now, points start counting from 7. Let's do the maths. Which means you have 1.13. Was it 1.4005, right? Minus 1.138. What was our figure then? I'm struggling to remember right now. Something 7, right? Okay, let's do that again. Shift, then right click. Take off your hand from the click. I think it's somewhere around 17. 1 7. 1 7. Now the result gave us 19.8, right? You will see this now. Okay, now so let us do the maths. Normal mathematics. If you use a calculator, take off 1 from 4. your normal arithmetic when you were in primary school. So take off 1 from 4, it will give you 3, right? So 1 to this 10, you have to this 0, that is 10. Borrow 1 from that 10, your 10 will become 9. If you bring it to this 1, it will become 10 again, right? Borrow 1 again from that 10 to become 9, then you bring the 1 to this 5, it will become 15. So 15 minus 7 will give you 8, right? 15 minus 7 will give us 8. Yeah, 15 minus 7 will give us 8, right? So our 0 here had become 9, right? So 9 minus 1 will give us another 8. Sorry, 9 minus 1. Yes, 9 minus 1 will give us another 8, right? Yes, to give us another 8. Are you following me, guys? So we have 9 again. This 0 here is 9. Also, 9 minus 8 will give us what? 1. Why this 4 had become 3 because of our subtraction, right? So we have, I think the other time it was 0. Yeah, it was 0. So this one was 9. Now, if this is 9, 9 minus 0 will give us 9. So I had to come down as basic as I can, right? So what you have here right now, your result here is what? This is 198 points, right? But if you are calculating that in pips, which, oh, so sorry about that. But if you are calculating that in pips, which is how we calculate most of our, that's how we do, that's the term we use more often. We use pips more often than points. We have 19.8. Are you seeing this? 19.8 pips. So that is how to calculate your distance. So back to where we're coming from. You can make this a round figure. Let's use 5. So this one will be 200, right? 600 points, which will be 20 pips. Simple, right? Very good. Thank you for following. So back to this place. So let's just stick with pips, right? Pips. So if you have 10 pips, what are we trying to say? That is the distance between this and this, right? So let's use our control. From this point, that's from 1.13801 to 1.13701. Let's just wrap it up here. Can you see that is 10 pips? That is from this 8070, that is what, 10, right? We get that, right? So that's how to calculate your pips. Let's say it is 1.78 that's 1375. That's what, 5 pips. Did you see that? That is from your 80 to your 74. That's, let's say, 75. Wrap it up, round up. That's 5 pips. Okay, so we are done with primary arithmetic. Let's go to the good stuff while we are here. So you can take this off since we want to use pip, right? Sorry about that. Since we are using pip value. Oh, what am I doing? Since we are using pip value, right? So 10 pips on Euro USD. 10 pips on Euro USD. Okay, let me make it here. So this will be more fun this way. So 10 pips on Euro USD on a standard lot size. Of course, it is USD, so we are calculating this in USD. Then that dollar is king in the forex market. So 10 pips on a standard lot size is $100. You see that? 10 pips on a standard lot size. That's when you're using one lot size. On the 10 pips, it is what? $100. If you are using 0.1 lot size on the 10 pips, that is $10, right? And if you are using 0.01, that is your micro lot size, that is the least lot size, on 10 pips, it is what? $1. Are you getting this? So just do the multiplication. That is, if it is 100 pips, okay, if it is 20 pips, let's not use 100 pips. If it is 20 pips and using 0.01, what's happened? 20 pips is what? Is $2. For a mini lot size of 0.1, 20 pips will be what? $20. For a 2 lot size, 20 pips will be what? Yeah, $200. You get it right. So let's say using 10 lot size for 10 pips, that will be what? $1,000 for 10 lot size. Are you seeing how it works? Now this differs by pair. For XXAUD, that is for any pair that is quoted against Australian dollar, the lot size is different. 10 pips for Australian dollar on a standard lot size, sometimes it varies a lot. So at times you can have, I think presently it's about $6.67. Sorry, yeah, 66.7. That's like it's lesser than Euro USD or XXX USD. Same thing for your mini lot size. Okay, let me do it this way. For one lot, as one standard lot size, this is what you have. For 0.1, which is your mini lot size, do the maths. What do you have? You have 6.67, right? Then for your least lot size, that is 0.01, what do you have? You have 0.0667. 0.66. Can you see that? So same thing with any pair that is paired against CHF. Any pair that is paired against Canadian dollars. That's why you say that when you pick, let's say you pick 100 pips on Euro USD, same lot size with 100 pips on GBP USD or Euro USD or anything AUD. Sorry. When you pick the same 10 pips or the same 100 pips on Euro USD, and you pick the same 100 pips on let's say Euro AUD or GBP AUD, you see that your result at the end of the day is different. Same pips, same lot size. That is, you're using the same one standard lot size, 100 pips. Same thing on GBP AUD, 100 pips, one standard lot size, but your result will be different. You will see that you'll be getting more figure on Euro USD than on XXUSD, XXAUD. So if you are using one standard lot size for 100 pips on Euro USD, what would that be? 100 pips, that would be what? $1,000, right? 100 pips. Now if you are using 100 pips, one lot size on, or let's say if you take an 100 pips, one lot size on GBP AUD or Euro AUD, what will you get? You'll be getting what? $667. Now this also differs for every asset. Dow Jones, US 30, every one of them. You need to understand how to know your value, your peak value for each asset. So can you see that it's not just about picking any pair? It's about, you need to know all of these things. You see, and if there's one platform that can help you understand this better, you can see that better on MetaTrader 5. Let's say you're using an Android phone. It's very easy on Android phone. You can just use your 2-finger, calculate your pips, and see your results. But if you want to get it more, go to this one, that is my fxbook.com. So once you go there, you can just go straight to the pip calculator. Yeah, pip calculator. You will see it there. You'll be able to check your pip value per different lot size. Yeah, for a 10 pips, for EuroChef it will be 11 point something dollars. Can you see that now? So when you are making $100 on Euro USD, same lot size, same pip value, for EuroChef it will be, instead of $11, instead of $100, it will be $117 or 115 or thereabouts dollars. Same value, and same pip value, same lot size value. So I haven't said that. So this will really help you to know how to calculate your lot size. Now, how do I calculate my lot size? Very, very simple. Very simple. Let's have another rectangle. Okay, so guys, let's quickly do a quick calculation here. Let's say you have Euro USD and you have 20 pips. Now these 20 pips, for you to calculate your value, you must see it as points. You get that? So instead of 20 pips, if it is in points, it will be what? 200 points, right? So 200 points times one lot size will give us what? $200, right? So here also we have 30 pips, but remember, in points, that is 300 points times X. This X here means you don't know your lot size, but you are willing to, you know how much you want to risk, but you don't know how to calculate your lot size. Let's say you want to risk $150. You know your points. Your points here means these 300 points here means your lot size. So your stop loss is 30 pips, right? So for you to get your X, that is your lot size value, you just got to divide 150 by 300. What will it give you? You have 0.5. You will see that. So 0.5 will be your standard lot size to use to calculate that. So let's say you have 300 points times 0.5, right? It will give you what? $150. Do you get that? Yeah. Okay, so let's go. Let's use a particular example here. Okay, so let's say I wanted to take this chart. I wanted to take this trade for my 15 minutes time frame. I'm not doing any analysis here. Yeah, I'm not doing any analysis here. Okay, this is right, my time zone is different. Level 15. Okay, yeah. So let's say you wanted to pick this trade from here. You wanted to pick this trade from here, from this high, after this break in structure. After this break of structure, you wanted to pick this trade from here. Okay, let me take this to the back so that our candle will be clear. So you want to pick this trade from here. So how many pips is this? Now you can try to do this manually. You can also decide to use. It's better anyway. It's better this way. So if you're trying to calculate it from here, no, you don't do that. You just put your cursor here. Click on Shift, then your left click. Can you see Shift and what? Left click. So these are many pips. This is 10.6 pips, right? 10.6 pips, that is 106 points, isn't it? So for us to be able to calculate, so let's say here you want to risk $100. You want to risk $100. You know your pip value already. Your pip value is 10.6, right? That is 1006 points, right? 10.6 pips, that is 1006 points. So this is, you know your lot, you know your pip value for your stop loss. That is your stop loss. You are putting your trade here. Let's say you are setting your limit order here, and you are willing to put your stop loss here. That is, if prices goes below this place, probably you feel your analysis is wrong. You know, just to measure your loss. So how do we know what lot size to use? You know your points. You know how much you want to risk. Then your lot size is times X. You don't know X. So how do we calculate X? X equals, your X equals 100 lot size, right? No, $100 divided by 106. Do you see that? Can you see how simple that is? So you know how much you want to use. You want to use $100. Then you divide it by what? 106. That is how you determine, or that's how you calculate, you know what lot size to use. So this is giving me 0.943. Now, for the sake of round figure, for the sake of easy figure, let's make this 11 pips, that is 11 points, so that we won't have too much decimal points to be calculating. Let's make it 11 points. So you'll be using what? 0.9 lot size. So if you want to take this, trade and you're willing to risk $100, you have to use 0.9 lot size times your 11 pips. We give you $100. Let me explain this further. 0.9 lot size times 11 pips. If it is pips, that will be, you just add 10 to make it points, right? What to give you? What to give you? $100. So let's say you wanted to risk $10, you would have used what? 0.09. Just calculate 4 more decimal points. That's all. 110 to give you what? $10. Now you might be saying, okay, maybe Daniel, kindly give us a better figure. Okay, now let's say you wanted to risk $500. $500, which means you can do your calculation to 50, you can do your calculation to 5. So I wanted to take $500 risks on this trade, and I add, the trade is 11 pips. That is 11 pips, add 10, it will become points. 11 points, that is 11 pips. So 11 pips times what will be my lot size. Your lot size will be X. Once you start doing this stuff, you won't need to do all of this calculation. All you just have to do is just to press your calculator. Just press your calculator. That is $500 divided by 110. So you don't need to, you won't need to start writing all of this down. But sometimes at your early stage, you might have to do all of this. So your lot size for this trade, will be 4.54. To do that calculation, 11 pips times, that's 1110 times 4.54 to give you approximately $500. Can you see how this works? So if it was $50 you wanted to risk, just pick what your decimal points, take it backwards. That is, it will be 0.45 lot size. 0.45 lot size. And if you wanted to risk $5, that's, if it was $50 you wanted to risk, it will be what? 0.45 lot size. And if it was, sorry, my bad. And if it was $5 you wanted to risk, it will be what? 0.045. Now you might not be able to use 3 figures on your M5. You just wrap it up to 0.05. Can you see that? So if you are done 0.05 times our normal pips, our pips is 11, that is 11 pips, that is 110 points. What do we have? 0.05 times 11 pips, that is 11 points. So we have what? $5.5. Can you see how this works? So you have what? $5.5. So that is it on how to calculate your pip value. Now, how do you know your risk to reward? It's simple. And just take this a long position, place it here. I'm going to put it below here. Let's use a round figure. This is roughly 11. Anyway, that was roughly 11. We are risking 11 points here. Okay, let's do 1:4. Let's do 1:3. Now, your risk reward. This is your risk reward. Can you see this value here? 3. Which means you are risking, you are trading, your lot size, so your stop loss is 11 pips. Then your take profit is how many? 33 pips. This is roughly 33, right? 33 pips. Can you see? 11 pips for how much? For 33 pips. Can you see how this works? If it was 1:4, and it's 11 pips for 44, right? Yeah, for 44 pips. This is what 1:4. So if you are taking this trade at this time, this is around 5:15 a.m. GMT plus 1. Right to this point, this is what? 11 pips. This is 1:4. We are seeing 4 here. This 4 is your risk to reward ratio. That is, you are risking, whatever you are risking here, multiply times 4 is your profit. So let's say you are risking $10 here. You are getting what? If they are taking you out on profit, you are getting what? 10 times 4, that is $40. $40. So I trust we understand that. See this. I'm not saying that this will keep going down. I'm only saying why we're having this rejection here. This is why we're having this rejection here. We're having this rejection here because of what is going on. This rejection is happening because of this other block here. This other block. Yeah, that other block is above this liquidity. That's why we're seeing this rejection here. That doesn't mean it won't keep going up. I'm only saying, I'm not saying this why it's coming down. It might not come down. Yeah. It might just retrace a little bit and continue moving upward, depending on where the market is going to ultimately. Oh, it can actually reject a little bit because this is another block on the 1 hour time frame. Another block above liquidity. So I'm not giving this as financial advice anyway. But this can keep dropping down to this zone here, for it to keep moving forward. But I think this should be bullish anyway because of all of this liquidity. So guys, so that is how we calculate. So let's say you wanted to take this trade. You wanted to sell. So to sell, you use your short position. You put it at this box. That is once you've known your demand and supply zone. Then can you see this is how many pips now? This is roughly sorry about that. This is roughly 13.8 pips, right? Let's try to make it a round figure. I like round figure. So this is 15 pips. So let's say you want to do 1:3 here. You decide to do 1:3. So 15 times 3 will give us what? 45, right? So you're anticipating that price will get to this point. So this is what? 45. This is how we do. This is how we roll. So you're anticipating the price will do this. This is it. So this is your pip value. Your stop loss is 15 pips. Your take profit is 45 pips. That is, you are risking 1:3. Can you see your risk to reward ratio here? 1:3. You can calculate this manually, and instead of you doing it manually, you can just use the tool that TradingView has provided. Now, how did I get all of these two out here? Simple. This is your normal TradingView. This is how your proper TradingView looks like. This is your Fibonacci tool. There, Fibonacci tool here. So I had to make some of my favorites because those are used more frequently. So I had to start it here. These are my long shorts. I use my long and my short position. Your short position is to sell. The long position is if you want to buy. I had to start the two of them. I had to start this one too because I use it often. I use my arrow often, my parts often. You would have seen it in my previous analysis. I use these guys often. So how do you do? You can just whatever tool that you use more often, just start it. I had to start my text to start them. You can use this tool. You can use if I should add this now, you will just check my favorites down and you see it has been added here. So if I unstart it, to disappear here. So how do you make all of this to show? So you can decide that you want this to be visible, and you can also decide that you don't want it to be visible. How do you do that? Just come down here. Just come down here, click on your favorite. Can you see it has disappeared? You click on it back, it will appear. So guys, so that is how we do. That's how we roll. That's how you calculate your risk to reward ratio. And as I used to say, at times you can decide to be, you can have a fixed. It's always good to have a fixed risk to reward ratio. If you are doing 1:3, do 1:3, and whatever the market does, if the market likes, you can do 1:5, 1:10. It's not your business. You've done 1:3, you are done for the day, or you look at the next pair of action. You get. So the market always presents opportunities to us. You determine when to get out and when to be in. Yeah, the forex market is one market that helps you to determine your risks, helps you to determine how much money you want to make. Yeah, it is left to you. It is left to your emotion. So it is not you against the world. It is not you against any other person. It is you against you. It is you against your emotions. So just find what works. Approach the trading market. Approach the forex market with a system. Have a structure. Have a system and follow it through. If you watch through all my previous videos, you would have seen that one of the major ways that I approach the market is, I stay more often on my what do I call it now? My 4 hours, and my 4 hours as my reference point, and I use what do you call it now? I use M15 as my entry point, and that has been what I've been using over and over again, and guys, I've been profitable. I don't need to stress myself. I've been profitable. Once I see what I'm looking for instance, this is another block here. Price sold a little bit, created the paper gap, and we had the liquidity. This liquidity here that was fed into this block. I just mark it out. How would I have engaged this sell? If I see a clean break structure on my M15 to the downside, I have taken this sell. And if I'm looking out for a buy, I have marked this place and I'm waiting for a clean M15. If I don't see the M15 BMS, I don't take it. It's as simple as that. Yes, can you see? This is another block attached to a fair value gap. This other block is what held all of this on, and price rejected from it. Even though I said in my past analysis on the weekly time frame, I'm actually anticipating that price will come down a little bit. Why? Because last week price took out a major high. Price took out a major liquidity, and it's rejecting from this other block here. Can you see? Guys? This thing is as simple as you want it to be. The price is rejecting from this other block. Fed liquidity was fed into it. And see, the same thing we do on the weekly time frame is what we are doing on the hourly time frame. It's just as simple as this. So ultimately, I can still be bullish on new USD because I'm still expecting price to come into this paper level. You can be taking this short sell for the meantime. However, don't forget that price is still bullish. So what's going on here? Price is moving away from an external liquidity into an internal liquidity. So once price gets into this internal liquidity, that is when we can know if market wants to continue selling downward or it wants to move to the upside. And how can you know that there will be a clean breaking structure on your daily time frame to the downside? If you don't see a clean breaking structure, right now we don't have a clean breaking structure to the on the daily time frame to the downside, which means you can say anticipate more bullish movement. Can you see this other block and mark it already? If price gets to this zone, then I should get this pattern. If this pattern form on my hourly time frame, either H4, 2 hours or 1 hour, I might consider a buy. So that's it for another day, guys. See you. Be good.